Let's talk about commercial loans. I do not like to give up control. One of the things that I've found in common as I've studied history of the great industrialists, manufacturers, entrepreneurs, investors of history, the great capitalists. Most of them at some point in their career gave away control, and it destroyed them or almost destroyed them. Doing single-family home as an investment, we have loans that were not designed for investments but are investment loans. We have the traditional bank loan, 30 years, great terms, no call provisions, all these wonderful, amazing things, low interest rates locked or very little adjustment. And there's very little the bank or lender can do to us as long as we what? Pay. Even though I took what was designed as that single-family home loan. Now, you know as the banker, it's not a single-family home. I mean, First Bank knows these are investment houses. They know I don't have 197,312. I don't have that many houses. But they know I don't have all these houses myself, right? But I'm getting a loan that's almost the exact same. Are you with me? The only thing was I had to put more down in. But I got the same terms and conditions. So if something goes wrong, and I don't know if you guys have noticed this, things go wrong usually at a really wrong time for things to go wrong. Who's noticed things don't go wrong when things are good usually? Yeah, no, things go wrong when it's already really bad. And then it gets worse, right? There's different provisions, different loans are a little bit different, but on commercial loans, and I can take my residential real estate as a commercial investment, and I can keep that residential type loan in place, or I can choose to pervert it and corrupt it and turn it into a commercial loan. But then I bring lots of things. First of all, they like to do innocent things like cross-collateralize. So right now, if you had 50 houses with 50 loans and the you-know-what hit the fan, you could choose to pick and choose to keep what you wanted and default on you wanted, correct? Yeah. We should talk worst case scenario, always. If you had toxic properties, bad loans, blah, 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 and everything's hit the fan, you could choose just to let what you want go and keep paying on what you wanted and protect it, correct? And have investors done that throughout history? Damn straight. You could also choose to go, wow, times are hard, but since I didn't overcrank and I didn't refinance, I mean, even if your cash flow just got horrible and the government passed rent control for the entire planet, yada, 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 et cetera, et cetera. People are like, well, what if the government doesn't? Hey, you know what? Even if the government tried to muck it all up, I'd still rather have a huge portfolio with a whole bunch of money coming in every month than your plan, which is nothing. I've been asked it since the 90s, early 90s. I don't understand why you're working, John. I mean, the whole economy is going to crash. The U.S. dollar is going to fall. I mean, the whole economy is going to fall. America's going to go bankrupt, for sure. Why are you working? You should just wait for it to go bankrupt and come back. Good plan. I've been listening to conspiracy theorists. People are like, how come you're not into conspiracy theories? There's only one reason why I'm not into conspiracy theories. They never happen. I know many of you have one that's about to happen, but it hasn't happened. And I'm just a pragmatist. I'm a businessman, okay? I can't wait for this conspiracy theory to occur while I live broke and hold on to that as my story. And I've met people like, well, I'm gonna be a great investor, after the dollar collapses. Okay, well, you told me that in 1991. It's 2023. You kind of missed most of your adult life and you're still poor. It's like, I'd rather be rich and lose it than never have had it. Anybody else? Hey, at the very least, we had a hell of a run. I saw guys do this. some of the big portfolio people in Arizona, and there's a lot of good friends. I mean, some of them weren't friends. Some were just people. But some were good friends. Some were Burley students who didn't listen. People are going like, what are you doing trying to live like John Burley? You've been doing this 4 years, man. John's been around for a long time. What are you doing, man? You're overexpanding. You don't need that. You don't need this. And they were just overspending. Anybody know people like that? Yeah. Just because you got it doesn't mean you should spend it. They refinanced a bunch of houses, and they changed them to commercial loans. And then, when they went to sell them, two things. Obviously, they had taken a bunch of the equity out and spent it. Well, that's tax-free money. That's what the rich people do. It is not what rich people do. It's what stupid people on podcasts tell you to do. There's a difference. Right? Do you really think rich people refinance their stupid real estate all the time to live off of so they don't pay income taxes? How did they buy the real estate? Because you need income to get the loans. Does anybody else connect the dots? Who sees the problem? I can't have a huge portfolio, and these people aren't raising money like I teach, right? You can't have a huge portfolio of property you bought if you don't pay any income taxes because you had no income to get the loans to buy the properties. Who connected the dot finally? Okay. You mean maybe they're not telling the whole truth? You think? Wow, you mean people lie to people? Next you're going to tell me that guys lie to girls in bars. We know that's not true. A lot of guys, I'm glad I'm not a single guy because that game would be tough with the internet. Whew! I can't tell her I'm the quarterback for the Oakland Raiders. She can look it up. Damn. Son, I never ever told a lie to a girl in a bar, honest. I did. I saw guys doing this. They had houses with equity, and it's like, wow, we're bleeding, and it was bad. I mean, that 9, 10, 11, 12, that was scary times for everybody. That was scary times even if you knew what you were doing and you had capital and you had reserves. Those were scary times. I mean, the world went under. And it really was. I mean, I did my best to navigate it to it, but I was scared like everybody else. And when the president did a moratorium on lending, that hadn't happened. That was 1932 stuff. I mean, the president of the United States pulled lending in 4 regions of America. That is unprecedented. That had never been done. That was scary shit. Excuse my language. That was. I mean, that's Armageddon finance stuff. There ain't no fear in the market at all compared to those days. And I owned a brokerage during Black Monday and Tuesday of '87. And those were scary days. I thought really good, and a lot of my older mentors and guys I knew who were 20, 30 years older than me, I mean, we were sitting there that night at like 1 in the morning because we didn't go home. And it's like, I'm like, Blaine, is this it? Is this 32 again? I don't know, man.
It was worse, actually.
For some, it was worse. Yeah. It's like, is this it? Are we done? Is this over? Did we just destroy America? Is it gone? It was that scary that night because nobody knew. And there wasn't electronic trading yet. So, I mean, your sellers have been sitting for 9 hours and they didn't go through. They just didn't sell your stock. And in New York, they were just selling their own. They were leaving all our West Coast orders just rotten. If you were an institution, your stuff didn't sell, it just slipped. And you had it all, you only could sell it at market. And market, literally your $100 IBM fell to $40. You thought you were getting out at 100, you got out at 40 the next morning. Or you could not get out. I mean, it was bad. It's the reason why people who have lots of money who've been through hard times talk like I do, and people who haven't don't. Because they have no clue what's coming and can come at any time. I knew guys who had this. It's just like, it's just a simple example, but it's like, okay, honey, this is really bad. Okay, but here's the deal. Look, how about I got like 20 of these houses that each got maybe 100 grand in them. Why don't we sell them for 50 each? We'll get out of here with $500,000, $750,000, and we can hold on for a year or two and see what happens. And then they sold them, and the bank clawed the money because it was a commercial loan. They didn't let them have the money. They paid the principal down on the other loans. I don't do commercial loans on residential real estate. I do commercial loans on commercial properties. But all the commercial properties that I bought with financing in the last 20 years, I didn't go to the bank for the money. I went to a private investor. I didn't sign for the loan because I didn't want the commercial loan. Now, if I was buying office buildings in downtown Phoenix for a living, I would be in those loans, but I don't do that primarily because the rate of return is too low. The cap is too low.